Hi there, my name is Lucia Kamau. I'm part of the Innovation Internship Program at Impact Africa Network. We are a non-profit startup studio based in Nairobi with a mission to ensure that young, talented Africans have the opportunity to participate in the digital transformation of Africa as creators and owners and not just as consumers. My main takeaway from my time at Impact Africa Network is how significantly important research is in innovation. Before exploring a business idea, one has to be mindful about the needs of the target market, understand what makes them cringe, and build a business around the solution that they actually need. Impact Africa Network's Lunch and Learn is an amazing opportunity to learn from experienced founders and domain experts about best startup practices in growing our entrepreneurial capacity. This week, we welcome Esther Waititu, Head of Strategy Development in Corporate and Investment Banking at Stanbic Bank.
Great, so thank you everyone. I just think it was just nice for you to all introduce yourselves, and I took all your names down because sometimes the older you get, you mix up and muddle names, so at least now I have an order that I can work with. So my name is Esther, Esther Waititu. I am not related to the governor. Many people ask, I'm not with the governor, so, yeah, I've been in banking for 20 years. Yeah, I graduated from Baraton, so I studied up in Eldoret. That's where I went to school. Before then, I was in Kenya High, here in Nairobi. And yeah, I've been working, most of my working career has been here in Nairobi, but I've also worked in Southern Africa, based out of South Africa. So I've got like a view of what the African world looks like. So today, Mark invited me to speak to you guys. I know you've got this great thing called Lunch and Learn, which is great, so we can share ideas. And I'm going to be sharing a couple of ideas with you, and I'm also going to be asking for your input. So anything you don't understand or you want to me to elaborate a little bit better, please feel free to interject at any point. So today we're going to talk about something that makes a lot of us wake up and go to work for, which is money. Yeah. So of course, as bankers, we take care of money and we give away money. So that's what we're really going to talk about, some of the challenges that we face in the banking sector. And probably together we can try and find some solutions that we can work together on that could help banking even become a lot better. So I'm just going to ask one person maybe to tell me what they understand by banking. I was telling Mark earlier that when you've worked in banking for so long, you assume everybody knows what happens in a bank and what people think of banks. So I'm just going to ask for honest feedback as to what you think or feel or understand about banks, so it can help me also now deliver some of my knowledge in a more practical way. So, what do you guys think a bank is, if you had to define it? Good and bad, I take all feedback. Okay.
In one word, loans.
Loans, okay, great. That's a good way of looking at it. Another way?
Savings.
Savings, fantastic. Okay, good. Any other way?
I would say a structure, a place where you put your money, in an organized way.
Okay. Thank you very much, Sydney. Yeah, that's a good. Any other definition you want to throw in there? Lucy, I can see you want to say something. You can.
When you think about banks,
It's right behind you. Yes.
When I think about banks, I think it's all about financial services.
Okay.
Anything financial, it has to go through the bank.
Okay.
Yeah.
Okay, great. Yeah. And I'll take another. Yeah.
For me, when I think about banks, I think about networks and numbers.
Yeah.
Yeah.
Yeah. It's true. It's very, very true. Any last one? Okay. Great. So what you guys have said is all true, right? Banks and how banking generally started is one person had money, the other one could do something with it, lend it out. So the loans that you spoke about. But before we even get to a loan, we actually need to have money to be able to loan people. So the definition that you gave around savings is so important, because we need people to give us money that allows us to then lend to someone else, make a little profit in the middle, and that profit we share. Yeah. So contrary to what you hear in Parliament over the interest rate cap, we actually share the profit that we make. So when you place your deposit, your savings with us in the bank, we lend it to someone else who desperately needs money at an interest rate that allows us to make a profit as the bank for all the work that we do, and also for the person who has placed their savings in the bank to get a return, to get interest. So the interest we get, we split two ways: one for us to make some money, and then two for the person who's saving to make some money. And so that's banking in its simplest form. We're like a broker, yeah, we're an intermediary. We just create a marketplace where people can place money, someone else can lend in a structured way. How many of you guys have lent money to a relative, a friend? Yeah, you all have, right? How many times has that person not paid you back? Huh? Always. Okay, so we try and prevent that problem, because we could be lending each other money back and forth. But the truth is, especially for relatives or family friends, whenever you lend money, they'll tell you, but mom's not well, but yeah, so you never get your money back. So to Sydney's point, we actually just create a framework that allows us to make sure that the person we're lending money to actually gives it back. And that's a lot of what the bank does. So maybe I'll just talk to you a little bit about the way the bank is structured, so you can sort of have a sense of what that means. So we have, and in banks we call it, there's two sales parts. There's the sales part where we get all the savers, okay? All the people who want to save money, we attract them and bring them into the bank. And so we've got a team of people who go and talk to those people who are big savers, yeah? And then on the other hand, we identify people who are good to lend to. Not churrelas who have not paid you back. Those are not the guys we look for. We look for the guys who will actually use that money to grow a business, to invest in properties, and we know that they're going to pay us back. So we've got the sales team. So the sales team, you can literally say, is divided into two. The ones who bring in the savings, and the ones who help us to find the right people to lend money to. So that's one structure. Then to make sure that that works well, we've got a credit team. The credit team does the assessment. So we sort of look at, say, James and say, what does James look like? How much money does he earn? Has he defaulted? If he defaults, can he sell his shoes? So that's the type of stuff we look at in the credit space. And that's an entire team, and it sits under risk. Because in all of this, we have to manage a lot of risk. Who knows the Central Bank of Kenya? You all know the Central Bank of Kenya? Yeah, they give us a tough time if we don't behave. They're like your folks. If you misbehave, they put you back in line. So that risk, that team that deals with credit, there's also a risk team that sits there to make sure that we're following all the rules that our folks, in this case who's the central bank, have put into place for us to follow. So we've got the sales team so far. We've got which other team now? The risk, which sits within compliance and credit. Then, when you want to withdraw your savings, yeah, what do you normally do? Who can give me an example of what happens when you want to withdraw your savings? What do you need to do at the bank? Yeah?
You need to provide a verification. You authenticate you're the one who owns the account.
Yes.
By maybe a signature or something of the sort.
Correct.
Then you give the amount you want to withdraw.
Yeah. Okay. So that is absolutely right. And we've got different ways in which you do that. So you guys are quite young, so I'll give you my story. When I was maybe a little bit younger than you, when my dad had to go and draw money from the bank, he had to write a check, physically go to the bank, draw money. So when I was about maybe 16, 17, ATMs are just being rolled out. But till today, my father doesn't use the ATM. Yeah, he still writes a check and goes and draws the cash. So it's exactly that. We need people who process, who receive. They verify that you are the person, and you can draw the cash. But it's become easier, and this is the role that each one of you are playing. The guys who are doing technology, digital marketing, and all of that. We started thinking as a bank, how can we make it easy? Because the queues, who's gone to like Equity Bank and that queue is making, you're even outside and you don't know, you can't imagine you're going to get to the teller. So to alleviate that problem, ATMs came into play. Yeah, so now you don't have to do any verification. The verification, when you're going to an ATM, is your card and your PIN. Yeah, so moving away from having that human contact where someone has to look at you, look at your ID, check your signature, and now that's gone electronic. So those are some of the examples of technology. Now we even have M-Pesa. Your account is linked into M-Pesa, right? So it means that you no longer have to physically go. You can actually do transactions off your phone and connect it to your bank account. And that's how banking is evolving. So I'm giving you the story of my dad, ATMs. I saw ATMs being rolled out. And at that time, they even had sales guys who stood by the ATM and begged you to use it, to show you how to use it, yeah? Yeah, it's funny, but it's so true. And that's the era we came from. So that just shows you that things have been changing. What you see today is because of someone's pain of yesterday. Yeah, so that pain was born by that guy just saying, I am not going to stand in that queue any longer. And so we had to respond and come up with a solution. So what we call that part of the bank is the operations piece, yeah? To make sure the ATMs are running, to make sure we're connected to M-Pesa, to make sure there's internet banking working, okay? So that's the other side of the bank. And that's a massive side of the bank. It's the heart of the business. Then we also have, so for you to do all of this, you'd need technology. So on average, how many bank accounts do you think? I work with Stanbic. Let me ask it differently. The leading bank in this country is KCB. How many bank accounts do you think they have? Just a number. How many bank accounts? Numbers. Just numbers, huh? Yep. Actually, you're right. They have 4 million bank accounts. Yeah. The total industry, we have about 32 million bank accounts. So we've got 32 million bank accounts. We're a population of close to 48 million based on the last census. It means most of us actually have bank accounts. But it's not just individuals, because even companies have bank accounts. So that also looks at companies. And so for us to manage this big number of 32 million bank accounts, what do you think we need? Some of you have those skills, right? Yeah. What do you think we need to manage all these bank accounts?
A system?
Correct. It's exactly that. We need a system. And a system is what based? Is it people-based system? I mean, what comes into your mind when you think of a system? Exactly, right. So then we've got a very strong technology team. Now, banking has shifted from us writing in manual ledgers to actually having a system that stores all that data. So today, if you ask me about any bank account, I cannot tell you, or that person in the front line cannot tell you. It sits on a database. So technology has enabled us to actually serve more people. Yeah, and that's a critical part. So we've talked about operations, we've talked about technology, we've talked about risk, we've talked about sales. And then the other normal boring stuff. I'm sorry for those who studied accounting. You have to have an accountant to make sure everything is balancing, which is the finance element of what you do, the finance and administration. Who talked about doing human capital or HR? One of you? Yeah. You're doing research in HR. So then we have to have HR because these are real people working and we need to find ways in which you work better together. Is the culture good? How do we reward people? The sales guys who have brought in the deposits or the savings accounts, those who are dishing out the loans, how do we incentivize them? How do we take care of their needs as individuals? So that's the HR side. And then there are those guys who check us, called the auditors. That's also another department that sits within within the organization. So I hope that just gives you a sense of what it's like as a business. Because sometimes you just see the bank where you go counter, but there are all these things that run in the bank that allow us to then now provide a solution. Okay? So now let me go on to the more human side of banking once we've done with the technical parts. If we were to divide our customers, because for us to reach our customers, we have to divide them into groups that would work logically for us. So James, you did psychology. What do you think those groups would look like? Sorry to put you on the spot. The groups of customers in the bank, what do you think they'd look like? How would you cluster them together?
I'm sure one group would be corporates.
Fantastic, yeah.
Definitely. For certain corporates, everyone else, I guess, I'm not sure.
Okay,
I'm not
anyone
sure.
else? But you're right, you're actually right. Anyone else wants to take a stab? He said corporates, and then he said the rest of us. Anyone else wants to take a stab? Okay, go ahead. Go ahead, Kepa.
So
Mark, sorry.
corporates, I'm going to look at it in terms of, let's say, in terms of entities. So corporates, then
Yes.
maybe SMEs, right?
Right,
Then,
right.
okay, in Kenya, there's chamas, like people who come together to
Yeah.
be able to do this.
Yeah.
Then just people, us guys. I don't know.
It's exactly right, actually. You're not far from the truth. It's exactly that. We've got the large corporates. Who can give me an example of someone that they consider a large corporate? Okay, yeah. Okay, other than Safaricom?
There's only one company.
There's only anyone, just the Safaricom.
There's only. You should just change our country's name.
Actually, it was Safaricom. Yeah, you saw that when Kipchoge was running. It was only Safaricom that was, yeah, but anyway. So yeah, those are the large corporates, the Safaricoms of the world, the BATs, the EABLs, and that's now put as a cluster, which every bank says corporate and institutional. Institutional include, the reason why institutional is in there, we've got the likes of the UN, yeah, they also need banking services. You've got the likes of large NGOs like JICA who sit in there, so that's generally corporate and institutional. So the people there talk to institutional and corporate customers to provide solutions for them, okay? And then we have the, SME middle market piece, huh? So those are the guys who can give me an example of a SME or middle-sized corporate. Exactly, yeah. Java would be fit squarely into that example. Another example outside of Java? Exactly, Jumia would be sitting in there. Yeah, so that's so that you just get a sense of how we look at the sizing of these customers. That's what we look at. And then the rest would be, yeah, us guys with our savings and all. So broadly, the banks, those are the three customer segments that we look at. So I have spent a lot of my time, when I started off my career, I was dealing with individuals. And as I've grown, I deal with companies, yeah, and large institutions. So a lot of that. So I've had experience on both sides. And this is also where you need to know yourself very well. Dealing with a lot of people a lot of the time wasn't for me, yeah. So that's why I moved to deal with corporates, because corporates sort of put their problems in one area and they've defined it very clearly. Whereas individuals sometimes are never sure as to what they really want. So that's a personal preference. I mean, there are those who would prefer to do it the other way. So that's, in a nutshell, how sort of banking works. So given that background, now that you guys have become stars and you've been able to answer all the questions and give those insights, I want someone to take a stab at what problem they would see. I'm just going to look at three areas. So I'm going to look on the corporate side, I'm going to look at the individual side, and I'm also going to look at operations, just focusing on those three areas, right? So operations and technology, we make that one. And then we look at large corporates, and then we're going to look at individuals. Okay. So based on what I've shared with you now, who can tell me one problem they see that the banks would have in the operations and technology space? Just one problem. Fantastic, yeah. Yeah, that's a perfect one. In fact, we'll stick with that one. That's going to be one.
What was it?
Security. Yeah, it's really a big one. And security, I'm going to expand on that. It's both physical and also cyber. And cyber for us is a massive issue, massive issue. Every time we go to sleep at night, we wonder which new technology or which dark night has gone into the system. So that's a big one. Okay, so that's on the operations and technology side. And then let's look on the retail side. Who can give me an example of a problem you think the banks would have on the retail side? Just even use your own experience, accessing your own money in the bank. What problem do you think would have? Yes, James?
Defaulting.
Yes. Rate of default. That's fine. That's cool. We'll stick with that one now. Okay. Good. On the corporate side, what do you think companies would have a challenge with? Doesn't have to be. It can even be imagined. Any ideas?
I'm lacking the words to say.
No, just say it. We'll give you a word.
Like the way like Safaricom is huge, it has to distribute the money and do like the different budgets and all that. What's that?
Can I give you like the word that we use in the bank? We call that cash management.
Yes, cash management.
Yes, that's the term. That's the term. Yeah. Okay. Great. Okay, so we're going to stick with these for now. Does someone else feel like there's a burning one that they want us to talk about?
Payroll processing.
Yes. That gives people lots of headaches. Month end.
May I suggest one?
Yeah.
Customer acquisition.
And that would sit outside of all of these, right? Okay. So we'll work with those 4. 5 actually. Okay. So let me tell you a little bit about the payroll processing and why I'm going to put it under cash management. So cash management, when banks look at it, they look at all the payments that have to be made by corporates. They look at all the different ways that corporates have to collect money. And then they also look at how those corporates invest or borrow that money. So that's what cash management is. So if you think about it simply, it's when cash comes in, cash has to leave. And there are many ways it will leave. It's either going to pay salaries, it's going to pay suppliers, yeah? It's going to pay overheads, okay? And then you're going to have either a surplus or you're going to have a deficit, okay? When you have a deficit, when it's less, that's when the lending comes into play. When you have more, then we have to find ways in which we can invest. Now, large companies like Safaricom, what do you generally think, where do you think they would be? Would they be having less or more? A lot more. So they'd have more. So we have to come up with solutions in terms of where can we place this money, yeah? So either we're going to lend, or what else do you think we can do as a bank with that money to make some money on it? Yes, exactly, invest. But where would you invest? Because in the same place as Safaricom can invest, you also can invest as individuals. So I want to just see I want to test and see if you know where those places are. Where? Yeah, where specifically in government?
Bonds.
What else? Yeah, but you're right, bonds is one of them. So we've got treasury bills, we've got the bonds, we've got the stock exchange, okay? We can just put it in a savings account that we call a fixed deposit for them to earn interest, preferred interest. We've got the other more complex ones where they buy bonds of other companies, corporate bonds, which are listed also on the exchange. But what I just want you to know is to understand scale, the importance of scale. Because each one of us here, we can actually invest. Do you know there's a bond that you can invest on M-Pesa? And Makiba, yeah. So we've just categorized them, but they're the same classes of investments that even organizations or companies get into. And I would not be doing my job if I don't tell you to look at those investments, for you guys to also invest your personal money, because they're good places to invest your money. Okay, so that's really what cash management is. So What I'm saying, between the two of you, what you said, cash management, it covers actually all of that. Yeah? Okay, so no, those are now the problems that we have identified. So now it becomes fun. I'm going to share with you some of the challenges that we face as banks within these four areas that we're looking at. So we'll start with security. Okay, that was a really important one, because remember, we use systems to track and to keep track of all the deposits you're making and all the loans that you're taking. Okay, what do you think the hackers are out there doing?
Preventing.
What the hackers are trying to do, because remember, we, as banks, we don't own the systems. We buy these systems from people who create systems that allow us to keep a database of our customer activity. Okay? So when we buy these systems, some of the things that we do, we check to make sure that we have what you call penetration tests. Yeah? I'm sure you guys know them. You guys have done engineering. Yeah. So you do all those, what the technical guys tell me, we haven't finished our pen test. So the pen test is basically around just trying to see if anyone can physically hack or get into our systems. Okay? And because we're buying these from third-party vendors, we have to make sure that the quality of the systems that we buy is really high. So when you hear banks saying that we're transitioning or we're getting onto a new system, trust me, there's a lot of work that's going there, yeah, just to make sure that we're secure. One of the biggest risks that we face in the banking sector today is cybersecurity. We've got all those, they're called the dark knights, the hackers who go in and I want to give an example of a bank, a global bank. This hasn't happened in Kenya, or if it has, no one has said it, where they orchestrated a robbery of a bank. So this bank, say, was based out of the UK. What they did is they stole card information. Remember, we talked about how you access your money. So they hacked and stole card information. And what they did is, at a certain time, they had people at ATMs in Japan. Okay, remember, now you're in the UK. I remember the time zones are different. So when they're sleeping, the guys in Japan are awake. And what they did is, in exactly 3 minutes, robbed the banks using these cards, ATM cards, with many people positioned in different places, $3 million. Okay? And that's just by penetrating a database. So what these guys do is they go keep checking card numbers. And they just pass even a 50-cent transaction, 50 cents. And then they know, okay, this card works. And then they create logarithms to try and figure out how to access. So these are bad guys. And when that happens, who's going to replace that money? The bank, exactly. And remember, we just get money from you, your savings. We make a profit in between. We lend, we make a profit in between, and we share. So it's always very frustrating when those types of things happen to us. So it's a really big and pertinent issue. I'm sure all of you have caught those guys on M-Pesa. We say, tuma kwa number hii. Or they call you and say, wow, I've sent the wrong number. Please withdraw quickly. We also have those guys. But those guys send links, yeah, to say, you can't access your account is going to be frozen, we don't have an ID for you, so click on this link, and then, so those are the things that we battle with all the time. Now, for the guys who've done a bit of engineering, what solutions do you think you can actually give to us as banks around that one problem? Sorry, I didn't hear?
Firewalls.
Yes, exactly, yeah. Firewalls would be important. We use a lot of those. But it's also getting people who understand technology very well, who can start to show us where the gaps are. Remember, us guys are working every day. First of all, I'm trying to serve my corporate customer. Safaricom is calling me, and when they call, I stand up. I'm like, what do you guys need? Because you want to make sure you have that account. So we are caught up in doing the day-to-day operations. And where you guys can add value, especially as we sit together here, is trying to say, if cybersecurity is such an issue for the bank, what role can I play? What information can I give back to them? Yeah, and this is where we need the creativity, because you guys are watching us. Us guys are working, but you guys are watching and you're seeing where the gaps are. Yeah, so you said a gap is around, say, firewalls. Any other gaps that you could see on the technology side that you can take advantage of to help us? Exactly. Yeah, solutions around encryption, that would be excellent. Yeah. There you go, James.
I think decentralization.
Okay, just elaborate a little bit more on that one.
For example, what blockchain is trying to do right now, but by making sure ledgers are stored in so many different places that it's almost impossible to obtain it and transfer
Fantastic.
something like that.
Yeah. So today we came with a solution to the banking sector that gave them a holistic blockchain solution. We will actually make a lot of time for you. Yeah, I know banks are actually exploring a lot of blockchain opportunities, even the central bank itself, even the government. So we're trying to see how e-citizen, a lot of the data that they have on us can then now start being moved into blockchain. So that's how you start thinking about how you create solutions, even though you may not be in that sector, but just by looking at those problems. So that's absolutely right. So that is a pertinent issue. But remember, we're afraid. I told you it took us how long? I was 16, 17 when ATMs came. Now they're a thing. And I'm like many years, maybe 20 years later, it's now become normal. Yeah? So the solutions you give today, never be discouraged because they take time to catch on. But just keep pitching them. Just keep pitching them because they are real. All the solutions you guys have mentioned right now around technology are real solutions. If you can find a way of doing encryption better than what we're doing today, we would have time to sit and listen to you. If there's a way you can enhance our firewalls, we have a lot of time to listen to those types of solutions. So that's how you go around building these solutions with practical issues, because these are really issues that we have identified. But in the interest of time, let's also look at defaulting. That was the other one that James came up with. So, how do you think you can help us with default? Yes?
Before you go to that, I was just asking in terms of talent and training. How, in terms of that cybersecurity, how do you guys view it? How do you conduct such trainings or talent? How do you acquire talent in that?
Okay. So, in terms of acquiring talent in that space, what we do is, because these are also new skills, right? So when I was in school, cybersecurity wasn't a thing when I was in campus. So I'll tell you about my organization, I can't speak about the others, but we spend a lot of time going to universities and working with the technology teams there to identify who the bright students are and giving them projects that they can work on. So like challenges that they do. And depending on how you do, we then now start partnerships. So we have internships, yeah. So you can start looking at those types of skills, and then we have people even who are working in different sectors of the bank, with different parts of the bank, who go and study, to get these qualifications, and then that one is a safe way because then they start testing some of these areas and seeing how they work. So one, it's going to schools, directly to the best schools, to find out how it works. And then partnerships with the likes of Google, Amazon, just to understand what's going on in their world and how can they also help us. So that's how we sort of start to scout for those opportunities. So those are the three ways in which the banks try and get ahead of the curve. Then the other thing is there are groups, cybersecurity groups or groups of professional bodies that come together where they've got a collection of specialists in this area. We also go and sit with them and spend time with them. And they also point us to the right people within that association. So that's also another way in which we gather the talent in that area and to develop it. Yeah? Make sense? Okay. Right, so we have the second one, which is defaults, which is people just not paying, which is true, it happens. What do you think potential solutions to that problem would be? Forgiving. That's not a solution. That means her savings are going, when you forget. Yeah, so what do you think you can do in that space? Yes.
Okay, I'm not really sure this can work.
Yeah, we try.
Prior research on the individual who's about to, before they took a loan, let's say.
Yeah.
Because I think if you find that this person has a track record of faulty or a track record of mismanagement of funds,
Mhm.
then they wouldn't qualify for a loan.
It's exactly right. I know someone has created that exact solution that you're speaking about. Okay? This is how you have all the metropolitans, all the credit reference bureaus. It was because of that one reason. Yeah? Because, you can be very nice to me. Yeah? Then I leave. You're very bad to Wycliffe. Yeah? How will I know? So I give information, you give information, people give information about you, but it will come from multiple sources, and then we have this one body that then gathers it. And that is the role of the credit reference bureaus. It's exactly that. Yeah? So if I want to do like a check on Daisy, I'll just send your ID number to the credit reference bureaus, and all the banks have registered the data of all the people who have bank accounts with them and how they behave. So all I have to do is go in and check and say, okay, so Daisy always pays her loans on time. Oh no, Daisy defaults. So if you guys are ever listed, and this is now advice, please don't get listed. Because even though you become a director of a company, yeah, but you have been listed on CRB, that company will never be able to access credit because they say you are a director in that company, and if you're running that company and you're unable to run your own finances, then you can't run that company's finances. Yeah.
Who's disqualified?
I'm just looking. I'm just seeing how guys are like checking themselves out. Yeah, so that's one way. So the credit reference bureaus, and that was one of the solutions because I think there are just 4 of them in the country, and that's what they do. They actually just do the reference checking, and now they're moving to the next level. So because we're being used only for that bad thing of if you haven't paid, we're going to list you. They're now saying there's a movement that's starting to say, how can we recognize those people who borrow and pay well? Yeah, let's give them like stars or some sort of category that when they show up in the bank, everyone should just be ready to give them the money that they want because they have demonstrated that they're able to do it. So now moving from it just being, I chopper you for every time you, to now saying actually there's some good guys. And for those good guys, we should be willing to open up our wallets and give them the money that they need. So that's a fantastic way of solving the loan default issue. Yeah. Yes.
Giving loans in terms of mobile banking, is it the same procedure of you go to a bank, you ask for a loan? Because for the mobile apps, they check your location, maybe your SMS, and I don't know, something else. So is it the same? Is it different with mobile banking from the traditional banking? Am I the same?
The principles are the same. So the things that we check are exactly the same. So the things that we check, where do you stay? Because these days if you open a bank account, you ask proof of residence, all those things. So it's the same things we check. But the way in which they check is different. So for me in the bank, the traditional banking, I'll tell you, please can you bring me a power bill? Please can you give me the lease with your landlord? And then I physically check them. Whereas on mobile lending, what they do is they check and see how many times, where does this guy go? Is it that he pays often at a club? Does he pay often? So they now look, they have got data analytics, and which is now a problem for us in the bank because we have all this data, but we don't have a tool that sort of brings it together. Yeah, but it's the same things that we check. But because mobile, it's actually tracking where you are and what you're doing. It's able to give you an answer quickly. Whereas in traditional banking, we have to gather this information to give you a response. So the principles are exactly the same. You want to check where you're spending, you want to check where you are, you want to check how your income comes through. Mobile lending does exactly the same, but they're able to do it much faster because they're using AI to do it, or different algorithms to do it. Whereas the bank was still using a bit of a paper process. And that's one of the challenges that we face, which is we want to move from a paper system into a more data analytics AI world that allows us to do this as quickly as the phones are able to do it. So the phones actually gave us an idea to say, how can we do our lending a lot easier? So we've got the likes of Tala, it's all on mobile, yeah? All these other apps. And we're saying, how can we as big institutions also be as flexible and as agile as these smaller mobile banking providers? So it's exactly the same. It's just that we have to look you in the eye, we have to know who you are. Whereas with technology and being enabled, we don't really have to do that. We just look at how your behavioral trends look like. So those are solutions you can provide to us in the banks and say, hey, this is a problem that we see. The loans when we come to you take so long, whereas online we're able to get them very quickly. Is there a solution that we can work together to help us move forward? And just to give another real example, that's why KCB and Safaricom have partnered together in giving loans. Because KCB recognizes we can't do it as quickly as you're able to do it on M-Pesa, so they're there. It's the same thing, M-Shwari. We can't collect deposits as quickly, savings accounts. And as much as Safaricom is Safaricom, you need real money at the end of the day. And so that's why they then have to come to the banks. And then that's why NCBA now becomes the M-Shwari person who gives interest rates on the deposits that you keep. So that's where the partnerships start forming. So we're trying to bridge modern day transacting with old school traditional banking. So I hope that answers your question. It's exactly the same, just the speed and the efficiency of doing it is a lot faster.
What about the amount? Doesn't the mobile target like a different segment and up to a different amount?
Yeah, so mobile goes really micro. Yeah, if you come to the bank today for a loan of 5,000, I mean, explaining the process and I've given you the structures of the bank, will it even be worth that whole structure getting involved to give you a loan of 5Gs? It doesn't really make sense. So where mobile has now become a good player is for those smaller loans which you just need to turn around very quickly, the Fulizas of the world, because of all the technology that's in there, I'm able to give it to you a lot faster. So that makes a massive difference for us. So now what the banks are saying is, let the mobile guys, because they're faster and the amounts are smaller, let them focus on that, because lending 5Gs is too much for me. It's too much work for me and the return is quite low. Let the mobile guys, because they're nimble and they're able to do it, they can do that. So then for us, come for loans that start from 50,000, we can start to help. And so you can see there's an obvious overlap because you can still borrow on these mobile applications, even up to, I think, about 150,000, you can actually still borrow. And so that's still permissible. It still works. So you're going to find an overlap. But what as banks, traditional banks we have looked at is the time and the energy to give you 5Gs. No, let's just start from 50. And then now the mobile space can now fill that gap.
So on that, do you partner with, let's say, organizations that aggregate all that demand to you?
Absolutely, yes. Yes, we do. In fact, sometimes we provide financing to the aggregator, say to the likes of Atala, and say we're going to give you a limit of up to, say, 100 million, as long as you manage that process of making sure the 5,000, 10,000, the smaller loans are collected. And that's why you'll find the smaller the amount of the loan and the more quick you're able to get the loan, the higher the interest rate is. Because they're in there. Because remember the mobile, remember we talked about the principle of us getting savings first, and then based on the savings we're able to lend. Now remember the mobile lenders don't have that flexibility of getting the savings. They don't. So for them, they have to come to the bank and they actually have to borrow money in order to lend to you. And that's why their interest rate is so much higher, because they have to make sure they're making a profit, okay? They're covering the costs of actually processing, okay? And then they have to pay us back. So do you guys see the chain? Because they don't have deposit. That's why banks are in a different place, because banks were able to raise deposits. So whenever you're looking at the performance of a bank, you always have to look at how much do they have in liabilities, and liabilities are deposits that we're holding for other people, and in their loans. Their loans have to be always lower than the savings that they have. Does that make sense? No, it doesn't. Okay. If Daisy has given me 100 shillings, okay, and I need to lend to Sydney. Sydney says, lend me 100 shillings. If I lend Sydney the full 100 shillings, what am I going to have in case Daisy comes today and says, today I want 20 bob for my 100 bob? Does that make sense? So I can't give the full amount that I'm holding as savings to someone to borrow, because If that person says, today I just want 5 bob, it's their money, they can take it. Yeah. So I have to make sure that for the 100 shillings that Daisy has saved, I can only lend to Sydney, and we usually look at it in that sense. We can only lend to him only 50 bob of Daisy's 100 shillings. So if Daisy ever comes back and says, I want 20 bob, I have money for her. Yeah. So that's why I'm saying, if you want to check the financial health of any bank, you have to check and see the deposits that they have must be higher than the loans that they have. Because if that's not balanced, the day you want to go and make your payment, your supplier payment, say now Safaricom decides I want to make a payment and I've lent out all its money, what happens? You actually disrupt a whole ecosystem. It means someone doesn't get paid, okay, because their salary will be late. It also means that the supplier, electricity, who's supposed to be paid, also can't get paid because their money has gone elsewhere. So that's how you look at it. It's never exact. So we create little buffers that help us to manage any swings that could come. Okay, so that's basically why. Yeah. So I hope you've understood the solutions that you can create around lending. Yeah, around defaulting, the credit reference bureaus. We've talked about now partnerships with mobile lenders so they can do the smaller parts, the smaller amounts. And because they're using AI, you're actually able to understand the behavior and the ability to repay. Then we talked about cash management, that big animal, how we collect money, how we pay money. What do you think the problems there could be? Can I give you one problem? Which is like a problem that was in the newspaper. So a big supermarket is collecting money and now they're driving that money to the bank. Then guy gets jacked. What happens? Yeah, it's gone. And then the guy shows up having bought cars and shoes. So you guys know that G4S story? Yeah. So that's really the background. So those are some of the challenges here, right? Because if you assume like Carrefour is a bank customer, when you go to Carrefour, how do most people pay?
Cash.
Exactly. That cash, and it's from multiple branches, it has to physically be removed from Carrefour and taken to the bank. That's what cash management is. And so Carrefour can then now electronically now pay their different suppliers who come. So companies like Carrefour face real issues in terms of how do they get cash out of their supermarkets and get it into the bank, okay? And so banks have had to be very innovative in terms of providing solutions. I don't know if you've seen, there's a place where they say no cash kept here so that you don't go and rob them. But part of what we've had to do is to create ATMs that do the reverse. Not ATMs that dispense cash, but rather ATMs that receive cash. Yeah? So we've had to do that. So I don't know if you guys have seen them, the cash receiving, yeah. So those are the solutions, because we've said that these guys have a cash problem. How do we help them? That could be one. The other one could be, can we convert all this cash for M-Pesa? Those people who still want to draw money, do the cash withdrawals for the money that they have in M-Pesa, they become a point where they can actually go and draw cash out of a supermarket till. So those are some of the solutions around cash collections and cash payments that we start to then look at. And I'm just conscious that we're running out of time, so I'm just going to rush a little bit. But if you have any questions, you can also feel free. But that's how you start to create solutions in that area. Where you start to see someone is collecting a lot of cash and the bank is not close to them, then we say, okay, we can actually bring a branch and have a branch in your bank. So the days of Nakumatt, remember we started seeing Diamond Trust having branches inside of the supermarket. It was for that one problem. So no one has to leave that branch. The cash goes there, and once the cash has gone into that branch, there's no liability. That liability moves away from Nakumatt. It now remains a problem of Diamond Trust Bank. So these are some of the solutions that you can think about in that area. Or if you guys can even connect some of the dots and see areas where we can be more efficient with use of money, we're more than happy. We're all ears and ready to listen. Okay. Now, the point that Mark raised, another problem that we have, customer acquisition. How many banks do you think we have in Kenya? It's close. It's close. It's between 50 and 40. We've got 43 banks in Kenya. 43 banks. 43 banks serving the three customer segments we talked about: corporates, SMEs or middle-sized businesses, and retail customers. Okay. Who can tell me how you think the distribution is like? Which banks do you think are making, out of the 43 banks that we have, where do you think the bulk of the customers are banking? Exactly, tier 1 banks. How many are tier 1 banks?
4.
No, tier 1 banks are actually 6. Yeah, so you've got 42 banks. You've got 6 banks where the bulk, 70% of the profits of the industry come from those banks. You also have concentration of customers in those banks. So you'd have about 60% of our total number of bank accounts in those top banks. So, with that context, how do I get more customers? Because the customers seem like they only want the top 6 banks. What do I do? Yes, James?
Low interest rates.
Yes, that could be one. But remember, I need to make money to also pay for everything, lights.
But you're still making an interest.
Yeah, so you have to look and see how that balances out. So that's true. So interest rates would be one. And it's a very valid point, because before Chase Bank went down, who remembers Chase Bank? You all remember Chase Bank. Before Chase Bank went down, who was giving the best interest rates for deposits? It was Chase.
Yes.
They're giving you 21, 18%. You're like, wow, running there, right? Yes, yeah. So now they needed that money, the deposit, so they could lend. So what do you think if you're borrowing from Chase Bank? Do you think, what interest rate do you think you're going to get? Was it going to be high interest rate, low interest rate? It had to be high. It had to be high. And so when Chase Bank happened, when Imperial Bank happened, and they were not able to settle their obligations, what do you think that did to me and all the other companies, you and I? We went to? Huh? Yeah, they went into receivership. But when they went into receivership, because you don't want that to happen to you again, what do? You go and look for the oldest, secure, rigid bank that you can find, because you know your money is going to be safe. They may not give you the best rates, but you know any day you wake up and you want your money, it's there. Yeah? So that means that the competition among these top 6 to 10 banks is really, really high. So what makes you choose Stanbic Bank over, say, KCB? What do you think would make a customer want to choose either one of those banks? Yeah. So customer service. So you have to have a really strong. So if we talk about customer service, it means that your operations and your technology has to be top notch for you to be able to deliver that particular service, right? What else?
Okay, as a businessman or someone who maybe travels a lot, you don't want to know the number of branches of, let's say, if it's in Sotek or somewhere. So also, I guess availability or distribution of the bank.
Yeah. That's a really important one. And so, if I'm still a good bank, but I can't be in all the places that KCB is at, what else would you look at?
We have the way the small banks partner to create ATMs. I don't know how it was.
Yes. Yeah, that was PesaLink.
Yeah.
PesaPoint. It was PesaPoint, yes. So you have to start coming together to create the distribution points. But then also using technology becomes so critical, right?
Yeah.
Because if I'm not in all the places you want me to be, but I can still make a payment on my phone, I can make a payment on my computer. So then technology becomes a key driver of how I start to serve my customers. Yeah? So you start using then technology and customer service as tools that can be attractive to your customers in order for them to bank with you. So If you guys had to build your own bank, what type of distribution channels do you think we should use? And distribution channels, how do you think I can engage either one of you to come and open an account with me if you had to open your own bank? What do you think would make banking easier when you have to acquire a customer?
Maybe this is outrageous.
No, try. You might keep trying.
Definitely outrageous. I would use social media.
No, it's not outrageous. There is a bank that's doing. There's a bank in the UK. Google it. It's called Atom Bank.
Yeah.
Atom. ATOM Bank. You never have to show up physically. Everything is done online, and it's one of the fastest growing banks. Yeah. And you're absolutely right. Social media. How many people are selling e-commerce? It's such a big thing. Yeah. Even banks. I mean, every time you're on a web page or whatever, you keep seeing banks account. So it's not outrageous. That's actually the tool that we're using. If you look at Kenya, 70% of our population is below the age of 30. Yeah? And below the age of 30, it's obvious that you're going to be on social media. Is anyone under the age of 30 who's going to be using, I don't know, what tool? Because even me who's above the age of 30, I do all my stuff online. Yeah? So it's not an outrageous idea. It is a good solution. It is a fantastic solution. So my challenge to you is, how can we scale that? How can you sell that to us? Yeah?
I didn't have it thought.
No. You don't have to answer now.
Okay.
No.
Yeah.
No, that would be unfair. I'm just saying this is how you create solutions and start to build different ways in which you can actually start to attract and acquire customers. Yeah. So it will require a little bit of research, it will require thinking, it will require looking at different ways in which you can do stuff. But that's really how you start to create solutions. Because this talk is really around me telling you about what the banks do, explaining and understanding some of our issues, and just creating that nice place where you can say, these are the solutions that we can actually start to present to financial institutions, so we can start to build a business proposition. Or if you ever end up in banking, you understand what the key issues are and how you're going to arrive there. Yeah, sure.
Question. So you mentioned what basically a bank is about, the different, let's say, sections of it, from operating, retail, individual, from sales, risk, operations, technology systems, like auditors and accountants. So my question is, let's say, because the financial markets are ever changing.
Yes.
How do you guys innovate? Is there an innovation department, or do you guys at what point do you guys create new products? That's basically it.
Okay. So, as you know, banks have struggled with innovating, but I think and different banks have done different things. But there's a huge realization that without innovating, we're never going to move forward. So most banks don't have a dedicated innovation team, but what they have, it sits in their product management teams. So the product management teams, what they do, their work is to continuously look at the behavioral, so your human capital comes into play. What are our customers requesting for more? And then they even work with the operations teams, the customer service guys, and they plow through the complaints that come through all the time. So if someone is always complaining that I have to stand in the queue, I'll go back to the earlier example that I gave. Oh, we have to stand in the queue all the time and we take 2 hours in the bank. Then we said, okay, the team says, let's quickly do a ticketing system. So you can sit and you can know, if I stand in the queue, I'm only going to be there for 5 minutes. So that for us is considered innovation, because innovation is not that big. It's not just a big thing that you do once. Innovation is also sustainable, where you're making small changes all the time. So that's being done by the operations teams. It's being done by the technology teams, where they continuously identify where the issues bubbling up, then we now fix. Then, of course, we've got the big game changer ones, right? The very big ones. And I'll go back to the use of the ATM as an example, because that was such a big thing to hit the industry. People had to spend a lot of time doing it. So they had little teams, project teams, that looked at solutions and played around with them to say, okay, now this we can now launch, and then it became the norm. So we don't necessarily have innovation teams within the banking sector, but what we do have is product management teams who go across the business and start to see what are the things that people are complaining about continuously. And based on those complaints, they start to try and build solutions around that. So that's how we do it. And sometimes it means also coming together as banks. That's how, the connectivity between, say, your bank account and M-Pesa started happening. That's a solution. Some of those mobile apps you see are actually being run by banks in the background. Yeah, they can't access them. So that means they've gone into partnership with a fintech in order for them to now provide that solution. Yeah.
Just wondering, you're saying how, I don't know, how we can approach banks to sell different business proposition, and you're like receptive, but how does that process look like? Because for me, I see banks have these closed buildings.
Yeah.
So how does the whole when do I get to you and present these propositions?
So the thing is also with banks. So banks, because of the way we manage risk, if you come as an individual and sell me a solution as a bank, I'm not going to necessarily buy it. Because I'm going to look at a certain criteria. I'm going to look at, have you implemented similar solutions before? Okay. Who are your partners? Who are the people who work with you? For this solution that you're bringing to me, have you invested any money yourself in it? Okay. And then now we can start having that type of engagement. So those are some of the things. So even though you've got a business idea, you then have to partner with a credible technology solutions provider who has that track record that allows the bank to engage with them directly. The other way that you can sort of share some of these ideas is a lot of the banks, I think many of us have innovation hubs, or what you call incubators, where we invite young, talented individuals to come into these incubators and we build the solutions together. Because then it's going to be based off your knowledge, but bank principles, so that it's a bankable solution. So when you see these innovation or incubators, that's what they do. And then that way they're able to develop a solution and you're able to sell your solution to them, because then they work with you to build it suitable for them.
Bank incubators, I mean.
Yeah, they're called incubators. Yeah, so we call them bank incubators, and we'll pick a theme. So for example, we say we're going to focus on cybersecurity. All these people who are qualified, there's a pre-qualification criteria that you get into. And if you go through all of that, then you go in and you work and you present an idea. They will work with you to build that and scale that idea. Yeah. So those exist, and there are many of them. Even the Nairobi Securities Exchange have one also, where you can go and sell a lot of these solutions for financial services providers. Yeah.
Last question.
Okay. Yeah. Yeah. Go ahead.
Okay. There's this problem with ATMs. I remember when I registered when I went for my service, and I went with my ATM, and then I was like, it was in Gande, and I wanted to withdraw for international withdrawal.
Yes.
And then my ATM went there.
The card went, or?
The
it was swallowed.
It was like that.
Okay.
And these were like the problem. I don't know if you have a solution. They had to bring back the ATM to the original bank again to get it back. But I don't know, do you have any solution about that?
Yeah, on the international side, that's a bit tough, in the sense that it's not in a different jurisdiction. Yeah, and if the card was stolen and they hand it over, how do they verify your details?
Because the ATM takes the card.
Yes, I understand.
And
yeah.
then you can't go to that bank to give you the ATM. The ATM will be aired back to the country.
Yeah, the ATM card. Yeah.
But sometimes you have, maybe it's a problem, you need to withdraw, you need to do what? How are you handling that problem? Because still, even with students, most of them have the card go and then it comes back to the country. It takes around 1 week to come back. And then that's become a very big problem. I don't know how banks are doing that to ensure that whenever even the card is being taken, it can just take 1 hour, 2 hours, you can get back the card.
Okay, so I can't speak for all banks because every bank has a different way of doing it. But in most banks, when that happens, at least on our network, my Standard Bank network, where I can vouch for it, once it's captured, you can go into that branch where that ATM is attached to, and you can provide identification, and your card can be given back to you. Yeah. But for other financial institutions where that doesn't work, the only reason that they send the card back, is purely because they want to verify with the issuing bank in the country that it's actually your card and you're comfortable for it to be sent back to a place where you're registered and people can actually reach you. So it's preventing fraud, but you're right, it's a valid problem. You should be able to just do it within an hour. Because by the time you're standing at the ATM, you need money. So 1 week later, it's going to, so
Alright, folks,
that's
we're kind of out of time here, and it's been awesome, but I'll just ask one final question.
Yes.
If you were to if you were to take a run at building a solution in the banking space, where would you advise us to look at in terms of building a business, an opportunity, a market space? Is it lending? What is it? What do you think it is?
I actually think the biggest space for me will be somewhere around data analytics, right? Because we've got a huge amount of data. So any solution that can help us to identify business trends very quickly would be a massive killer for us, because that talks to customer acquisition and customer retention, which is, the backbone of supporting our business. So I think that would be one of the areas that we would definitely be looking to focus on.
Cool. Thank you so much.
Thank you.
Yeah.